What's up everybody, Tom here with another video. In today's video, we'll be taking a look at the stock markets for the week ahead. We'll also be taking a look at our top-down technical analysis approach for the S&P 500, Nasdaq, gold, Tesla, Bitcoin, Ethereum, and more to try to really pinpoint some of these key critical zones that are being reached and will be reached throughout the next couple of sessions. It's been highly volatile in the markets, and that is leading to a lot of opportunity. Let's take a look at that together right now. Stay tuned. All right, guys, well, one of the ways that we can get a good idea of what's going on in the stock markets is by taking a look at either the stocks that moved in previous sessions or even the exchange traded funds that have moved. This gives us an idea of which sectors are hot and which sectors are not right now. So straight away, you know that the technology sector is still kind of reeling. Now, a lot of this is due to the 10-year, 20-year, 30-year Treasury note yields. And we will look at one of those throughout this video. But they were the declining sector along with healthcare in Friday's session. We also had emerging markets suffering and the Chinese market suffering due to some interference from the government in the markets. But when you take a look at other sectors, things like the financial sector, things like the energy sector, industrials, utilities, they were actually up through the session. The S&P 500 closed at a pretty good point when compared to the Nasdaq. So should we be concerned about this, or is this more just an opportunity in growth and hypergrowth tech stocks as we see sector rotation? We'll be taking a look at that when we get into the charts in just a few moments. Speaking of the charts, let's get started with the volatility index, or the VIX. Now, for anyone that hasn't been following this, pretty much 20 is the most important zone for the VIX or volatility index. It represents the difference or the line between huge volatility and a normalized market. And we're back to approaching the 20. We're sitting at 20.7 here for the S&P volatility in the weekend. Now, every time it's hit this 20 or around this 20 level, we have seen a spike in volatility and more of a corrective phase. But what I'm thinking this time is it may be a little bit different. It bounced up, but it didn't stay up there for long. Notice in the previous history, a bounce off the 20, quite a sustained amount of high volatility. A bounce off the 20, sustained volatility. A bounce off the 20, not that sustained, which makes me think that we are looking at an S&P 500 that's trying to move to the next levels. This is ahead of course, the stimulus checks, which many of our US viewers may have already received over the weekend. Now, what does Wall Street like to do? They like to trap people, and trapping is one of the things that they do best. When we're talking about how do they do that, they create fear in the markets, they create bullishness in the markets, and everything in between. Here's the bond yields for the 10-year Treasury notes, and we can see that it went to 1.64 on the close of Friday. Now, where do I think this kind of level hits out? I think it's around this 1.952, and it's not unusual for bonds to quickly reprice in the markets when recoveries happen. I talked about this on the live stream, and if you're interested in viewing our live stream, definitely consider subscribing and coming and watching the Monday, Tuesday, Wednesday, all the way through to Friday sessions with us. But look at the GFC and look at the quick repricing of bond yields. These are the weekly charts. You can see it initially repriced, then it repriced all the way back up to probably pre-GFC highs, and then started to stagnate and move down. So it's not unusual for it to move this way. We'll continue to watch this story. Now, if it got past 1.95 or the 2 level, I'd be pretty worried about what this meant for the market. But at this stage, I think this is just a normal recovery. It's really just the speed that's got the market excuses going on. But I've also done some correlation with you guys talking about how the Nasdaq and those 10-year yields are not necessarily correlated over the long term. We can have good performance out of the Nasdaq even when yields are rising. Let's have a look here at the dollar index, because this will probably shape or break the S&P 500 and other stock trades, and even gold and silver for the week ahead. So the S&P 500 closed at 91.69. We'll get started on the weekly chart here. This bounced off the 20 exponential moving average. Now remember, when we closed above that, we were signaling a change in dollar strength. We were also signaling the fact that we had these points where there was dynamic resistance, and that could become dynamic support. And it's exactly what did happen through the Friday session. Scroll down to a daily, you'll notice that I thought it would stop around 91.50, 91.60. It went down slightly more, which is why we don't catch the falling knife. And we go in the 4 hour, and everything's acting pretty technically right now. The support became resistance, and we're in the middle of nowhere land. So for this week, I'll be looking at this 91.95 zone as a resistance. And if the dollar index bulls and it goes through this level, what will that be? It'll be a trough, a peak, a high trough, and a higher peak. And that gives us a sequence event that shows us a change of trend on the 4-hour towards the bull side. Now, if that occurs, do I think there'll be some rockiness in the S&P 500? Yes, I do feel like the S&P 500 may suffer through that type of closure event. And it will signal not only 92.50, but probably a bigger movement to the 93 zone. Now, if the dollar index continues to weaken and breaks through this previous trough, then we're making a sequence where we've got a peak, we've got a trough, we've got a lower peak, and the sequence is really down here. So we've got another continuation pattern all the way back to the 91 or worse. And this will lead to the S&P 500 most likely bulling up and moving heavily. Now, we'll move into the cryptocurrencies before we get into gold, silver, and the stock markets. Let's look at Bitcoin first. Guys, congratulations, 61,584. Not only was 60,000 smashed through, which we all thought as a community together would occur because of the price action, but our beautiful 4-hour 20 held. Now, we had a lot of people being concerned during our live stream, and I was talking about learn from the left-hand side and the right-hand side may follow that kind of trend. And we saw that the 4-hour 20 exponential moving average was an incredible level of strength on the 4-hour, and we need to wait for those closes. We saw a bullish close here, followed by a little bit of coiling, and then just bam, straight through. 60,000 did not hold Bitcoin back. And this is because when you reach a critical number just underneath a round number like 60,000, you are going to coil there, create enough pressure, and just bust through the levels. It's a technique that we teach on this channel and we talk about a lot, and it continues to work very well, and will always continue to work very well. It's common in Forex, commodities, stocks, everything else. 65,000 becomes the next target. Yes, we're trading about 61.6, maybe 62,000 acts as a little resistance as we've overextended. We pull back to the 4-hour 20, and I expect that pullback, buy up, pullback, buy up to occur and continuously hopefully hold. And when it doesn't, that will signal a further correction. So 4-hour 20 is what we're watching this week, guys. Continue to check that out. Now, as Bitcoin moves, so does Ethereum, but Ethereum lags Bitcoin. Beautiful coil here. Ethereum moving towards the magical 2000. Will it hit it? Most likely, yes. So it'll probably go to the 2000 up here, and then it will have to make a decision whether it's meant to move to the next level, being like a 2200 or a 2400 or 26. Now, a lot of you know that I believe that Ethereum is slightly underpriced compared to Bitcoin because the BTC ETH ratio is off. Now, I think a lot of that's because of Cardano and DOT and other things kind of competing with Ethereum, and at the same time the gas prices. But this is a beautiful coil, nice breakout close on the daily, and this all signals hopefully further strength into the levels. Things to watch this week: a pullback back to this critical kind of consolidation, followed by buying pressure. 2000 resistance could be a problem here for Ethereum, but it seems likely that Ethereum wants to move to the next level throughout the next couple of sessions if Bitcoin holds above 60,000. Remember, if Bitcoin starts to consolidate, all the altcoins will benefit from that consolidation. Money moves out and money moves in to the alts. Let's take a look at gold. Gold bounced off our 1676 level. It was a beautiful support resistance play on the weekly. We then have now seen a fairly bullish close on gold, and this is because the dollar has started weakening. Take a look at this daily. The daily has closed as a bullish hammer. So if we see some follow through early this week, we've still got 1740 being a resistance zone, but if the dollar index continues to weaken, we may even move into the 1760. I would expect a lot of selling pressure there though, because we have previous support and resistance here at this level. So be careful for spikes into 1760. And for now, we're still in a downtrend on gold. We need more market structure to occur before we really can realize that things have bottomed out and they're ready for the next move up. I do think gold is probably in a consolidatory area here, and it's going to be a little bit tough to trade, more of a day trade kind of level than necessarily a big investment level at this stage. Silver, similarly, what have we got going on? We have the double exponential moving averages, the 20 and the 50 on a significant time frame daily. Our trend line holds true here. We move up, we hit this level, we find resistance, and it starts selling off. Now we've got to dial into the smaller time frames. 25 is support, and a break close above this level this week will signify a movement back up to 2780. So it's an exciting time for silver traders, but it's still very, very cautious as we're stuck within these areas. I would say it looks more bearish than bullish right now, but it all comes down to the dollar index and those key critical levels. Look at the dollar index. Whatever it's doing, silver and gold will generally follow very closely. For the GME AMC crowd, I know a lot of you guys are pretty pumped and pretty hyped about what's been going on so far. We did have a breakout of the 275, but it wasn't able to sustain very well. It went to 295 and then came all the way back down into the range. These mean that the critical levels are going to be very, very tough. You'll notice it hit that resistance and sold off last time. 295, 300 now becomes the resistance you have to break to get back up to the 350, 348 area. And in between, it's just, can we hold a sequence of higher lows like we've got now? Higher low, higher low, higher low, higher low. If you can continue to do that, you're showing bullish sentiment. But both of these trades rely solely on sentiment. Now that we've seen a big whipsaw action, if sentiment continues to die for 1 or 2 days, it could degrade very, very heavily. So be very careful in both GME and AMC right now. They require sentiment to hold through the Monday session, and that means diamond hands must be out to play. We'll continue to cover these in the live sessions because they're by the moment kind of trades. You have to always be on top of them as they move incredibly quickly. Tesla traders should be very, very happy with the Friday close. Closed down 0.84%, but more importantly, it found support, guys, at the perfect level. That 660 came through for us, 665. Buying pressure was there. Support, 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 all the way through. Now we're starting to create structure on the right-hand side. So I've mentioned this a few times. If we create structure here, which we already have, we've created some structure down here, and then we do it here, the more we coil between the 720 and the 664, when the breakout occurs, it's going to look like a inverse head and shoulder. Now, if we have an inverse head and shoulder, what does that give us? The target between the head and here, and we can extrapolate that out, and we'll do so in the live streams, to the next zone. 720 worth watching on the resistance. I think that if we break past 720, we should move into things like the 760 and possibly even the 800, the magical 800 zone. Be very careful with boxing up an area around 800 though. If you're a day trader and you want to get out of this trade, you may want to consider watching it carefully up here because there's a lot of weird structure points like here, before the 800 where I could see the market dipping because of the massive profit that some people will be having from picking this up in the 500s. Tesla's looking good. The price action is looking good throughout most hypergrowth stocks right now. And as we know, whatever Tesla is doing, generally NIO and others will be following. Let's go over to the QQQ and the Nasdaq. QQQ Nasdaq held well. It didn't really show us anything bearish. 325, 324 remains the level that we must watch. We saw an increased level of volume as well in the trading session through the Friday. And most importantly, it closed green. Now, what does that tell us? It tells us that Wall Street weren't scared and they weren't punishing retail traders into the close. They were actually optimistic and bullish to hold over the weekend. Now, if traders and investors hold over the weekend, it means that the fear is coming out of the market. We saw that in the volatility index. But we also know that this means that it has sustained that 310 onslaught. 310 onslaught on the QQQ is the same as what we'll be looking at in the Nasdaq around that 12,800 level, 12,750. And the more it holds here, the more bullish you can become because you know that there are buyers and there's demand at the previous supports. This is the beautiful thing about technical analysis. You can get a lot of sentiment by understanding the key levels. So this 310 to 312 level held. We move up now, hopefully to the 324 this week. And if we close through this, well, guess what, guys? Back into the previous highs. And this should push the S&P 500 well over 4,000. We'll be talking about that soon. But this is nice. The double bottom's in play. Everything's pointing towards the 324 for now, including those stim checks that are coming through. NDX, what's going on? Same thing. It's a carbon copy. 12,750, 12,800. Acted as support previously. Acted as support on Friday again. And now that it's testing this and gone bullish, we should hopefully now see a move to the 13,300, and a closure above this zone this week will signify a lot more bullish pressure. Now for the bears, all you're looking for is a close under the 12,750. If you get that, back down to the 12,250, and it will be pretty brutal and pretty quick. So there is always the bearish and the bullish side. We just need to understand the key critical zones to signify the bulls are in control or the bears are in control. Right now, it's the bulls in control of the Nasdaq and the broader markets. SPX, our trend line still remains intact. Remember, any new viewers here, welcome firstly, but at the same time, this trend line is key to all levels in the future. If we get continued bullish momentum, where do we go? Through the 4,000 and onwards to the trend line. And when we reach the trend line, what do we expect? Selling pressure to occur here, and most likely some form of decline in the markets. This will all probably synergize together with things like put call ratios and other things that we'll cover on this channel. But it's really just the bullish show here for the S&P 500. It came down to 3,900-ish on the futures, bounced off that area, closed at 39.42, still above our 39.30 resistance highs, and it's looking bullish into the next week. Go have a look here at the weekly. Bullish close, completely knocked out that long leg doji. And as we know, that was an indecision candle. So you have an indecision candle like this, followed by decision. The market is telling us we're ready to move to the next level. You may disagree with it, but this is what it means. Long leg doji followed by decision means the market's momentum has now been found. It could have gone bearish, it could have gone bullish, but in this case, it has gone bullish. I expect some form of green pressure to come in through the sessions this week, and that's probably due to the stimulus bills. Is it a trap set by Wall Street to take all that stim money? It may be, but we'll have to continue to watch the price action to find out what's next. So S&P 500 looks bullish for now. We'll continue to look through it. It looks like it's going for new all-time highs towards the 4,000 at least. I'm not sure if 4,000 is going to be the same kind of resistance that a lot of people expected. And the reason why is because we stopped before. Remember what we learned in Bitcoin. It stopped, it pulled back before. We found some resistance at the highs with a little bit of a pullback. And now if we coil here and then we start moving up, 4,000 most likely will get beaten out and it will go to the trend line that's been intact, which will probably act as selling pressure. In terms of news, it's always important that you guys know what news is coming out. This week, Wednesday probably in the US, Thursday my time here in Australia, FOMC economic projections, the statement, the press conference, everything's coming out here. Tons and tons and tons of discussion about the US economy. Be very aware of that. We must be on point when it comes to what's going on with the FOMC statement. So this bit of news is probably the biggest one for the week ahead, and I wish each and every one of you the very best in your trading and investment journeys. Remember to subscribe if you enjoy the videos, give us a thumbs up, and I'll see you Monday live, pre-market, around 3 to 3.5 hours before that market opens. It's going to be a lot of fun, and I want to say thanks to the support. We're about to hit 50,000 subscribers on this channel. Thanks so much, guys. Bye for now.